Andrew, what are you expecting from the ECB tomorrow? First, the dynamic is Mario Draghi may or may not want to lock in Christine Lagarde into something. And two, would they wait to see what the Fed does to decide on more stimulus?
Yeah, good morning, Francine. I think the sequencing is going to be that the ECB July meeting will be one of signals, and it'll be the September meeting that is one of action. I think President Draghi raised a lot of expectations, both in the market and I think among his fellow governing council colleagues as well, through his June press conference and through his speech at Sintra, that the ECB should do something. The data today suggests that that view is correct. They should do something. But I think they will wait until they get the new macro forecast in September, and we'll see the action, the decisions actually taken in September. We could see tomorrow a slight change on the forward guidance. It would not surprise me if we have the word or lower inserted into the sentence referring to the policy rate, that it could go, it will be maintained at current levels or lower in the future.
Rupert Harrison, do you agree with that? And actually, can we expect anything different from Madame Lagarde than we did from Mario Draghi? Is she going to push much harder on fiscal spending?
I think she'll continue in many respects. She's very much the continuity. They're very close personally. I think her view of the world is very similar, and that's a good outcome, I think. I agree. I think we will probably get changes to guidance tomorrow. I think they will be teeing up September as a big decision around rates and potentially QE. Obviously, the PMIs this morning helped that case, but it's not really the manufacturing slowdown that's driving this. I think it's a much bigger shift in reaction functions. I think Mario Draghi's Sintra speech is a really important summary of the way that central banks, not just the ECB, now see their job as really defending inflation against these kind of persistent downside shocks. And I think that there's a pretty good chance we will see significant action come September.
Andrew, Cameron Crease at Bloomberg had a chart that went worldwide yesterday, really showing that some of this slowdown is not just about a trade war. Is your perception that the EU manufacturing recession is all the fault of Donald Trump, President Trump, or is there much more going on here?
Well, certainly the uncertainty about trade is a dominant driving force in the data and the slowdown that we see in the manufacturing sector. And that's especially relevant for a country like Germany and the Netherlands as well, that are huge exporters. But there's also other pockets of uncertainty that are specific to Europe, the negotiations on Brexit and whether at the end of October there's a deal or no deal. And then we've got a pretty mature cycle underneath it.
Andrew, what are you actually doing at Pimco to adjust to a European slowdown?
Well, a good question, Tom. I think there's a lot priced into markets already. 20 basis point rate cuts for the ECB. There's very strong momentum on yields and on spreads. The central banks have turned. That's why the momentum is going in the direction it is. I think that is an environment in which one is not short duration. But really, given what's priced in, there's not a lot to be done right now. I think you can do some things on calendar spreads and call spreads and rates, but really, given what's priced in, it's already there.